Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you all for joining. It is Tuesday, November 26th, and it's 10:56 a.m. Eastern. We're a couple minutes away from 11 a.m. We're going to go for 2 hours and a little bit just after 1 p.m. Eastern, and then I need to take off. I got to go help my dad put on winter tires on the vehicle. It's getting cold, it's getting wet and snowy, and welcome to December Canadian weather. So we got to get snow tires on our vehicles. So no driving Lambos in the winter here. Unless you can put winters on a Lambo. That would be something if you see that over here. We don't have the terrain for that type of stuff. If you live in Florida or California, you guys have a beautiful weather all year round. Unfortunately, we don't. We need to get a shovel out here and dig through a lot of snow. So, guys, the plan for today is we will dissect the markets really quickly with Forex Factory and earnings just for today. We're not going to go for the entire week. We did that yesterday. And we'll do two securities, split screen. You guys don't even have to ask me because I know it's gonna gold will be number one security we'll look at, and then we will choose a index, US index, either Nasdaq, Dow Jones, or S&P 500, and we will watch both of them simultaneously. And if you do have questions pertaining to those securities, I will try and answer them to the best of my ability. Okay, guys? So I hope everyone is having a great day, a great start to the day, a great start to the week. We know it's American Thanksgiving on Thursday. Some of you guys are just trading half week, taking a couple days off. If you are, that's perfect. I just talked about that. There's nothing wrong with taking a day off in the markets. And another thing I was talking about is if you figure out that your security or the day is trading very choppy on your particular time frame, don't force trades. Sit back, relax, be patient. If there is no trade, if there is no setup, don't get frustrated and force trades. I guarantee you're going to make a lot of mistakes that way. Understanding to be a better trader than what we are right now is to decipher which is good volume and choppy, difficult volume to trade. If you need to walk away from the market for a couple hours, if you need to walk away from the market for the afternoon or walk away for the entire day, it's normal, guys. I want you guys to understand that. Do not treat these financial markets like a casino and get addicted that you have to be here 24 hours a day, because you will see and achieve more success if you are very disciplined with what you're trading and understanding that you can walk away from the markets and it's not the end of the world. I guarantee you these securities will be here 24 hours from now. Tomorrow when we have this conversation, the candles will be moving. The next day they'll be moving. Every single day is an opportunity, but try and look for the best volume possible to trade. If you're trading real difficult choppy session and you're frustrated, then the next day you see it's trending volume and it's very bullish and the pullbacks are coming right into those discount fair value gaps, and they're coming out of there in those pockets. They're respecting 50% of the volume, and you're buying the lows and selling in the highs, and you're repeating that, and then you want every single trading day to be just like that. So there is those days in the market, believe it or not. There's 2, 3, 4 days a week of that type of volume. But then there's always going to be in a week maybe one shitty, difficult day, maybe two. Sometimes one entire week, depending on what news we have and what's going on around the world. Okay, so I don't want to spend too much time on that, but it's important, guys. It's important to understand your own psychology, your own mindset as a trader, and these markets. These markets want us to trade when it is choppy. They want us to get frustrated. They want us to over leverage. Markets want us to revenge trade. The markets want us to lose our hard-earned money. Let's be smart about that. Let's not give back, okay? Thanks everyone on Zoom for joining. I appreciate all of you guys. Dan, Bavna, welcome. Ms. Jaquel Jones, thank you for joining. Already gave a like on YouTube. Thank you. I appreciate that. That's awesome. Thank you so much for that. Efren, what's going on, brother? Thank you for joining. Yeah, it happens, Efren. It happens. It happens. It's life. You might take a loss on a signal, but made it back up with Nasdaq trade. That's awesome that you made it back up. Now I would regroup. If you're back at break even, reanalyze the market, see how you're feeling mentally. Do you want to continue trading? Should you back off a little bit? That's part of trading. That's figuring out. But number one, congratulations. It's big to come back from drawdown. Yesterday, same with me. I took a trade on the gold. I went initially in profit. I didn't execute anything. I was looking for a bigger move. Then that gold trade came and hit my stop loss. I was at a loss on the first trade, and then I made it back and some more on the Nasdaq trade at Wall Street. So that's trading, Efren. Well, that's good. That's good that you recovered, and we move on. Everyone on YouTube, thank you guys for joining. Tony Gold, thank you for joining. Habibi, always respect. Thank you for joining. Tashi, Fukas, Perdaman, welcome. Dinash, Sajad, Shita, Lucky Kumalo, welcome guys. Okay, so what we're going to do is let's get started with finding out what's going on around the markets today specifically news-wise. We already had the European session. It's already done. We move on into our 8:30 North American session. Normally we see some red folders, orange folders at that time. We don't have much going on this morning, red folder wise, around 8:30. There is some US news in the market. 10 a.m. we start to get a little more. So right into Wall Street, 30 minutes after Wall Street opens, we have our US consumer confidence report. So previous was 109.6. They were forecasting 111.8. It came out basically 111.7, pretty much same. If you don't understand what the consumer confidence report is, it's exactly what it is saying. Consumers, are they confident in the market? If you need to read a little bit more, average or actual greater than forecast is good for the US currency. It's released monthly. Why do traders care? Financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. We are going into a holiday season in North America. It's end of November, early December. There's a lot of individuals that are getting ready for the holidays, Christmas, and all of those things. A lot of spending, buying their kids presents and toys, and their family and friends, and going out for functions and dinners and restaurants and all of that. A lot of spending generally happens November, December, and then consumer spending kind of dries off. After January, there's a lot of deals. There's Boxing Day and discounts. And then come February, that's it. Consumer spending dries up because a lot of consumers put a lot of consumer debt on credit cards, and then they got to pay that all back. So this is generally when we should see consumer spending, especially now, end of November, December. So when we start to get these, remember the previous month. So this is from previous month. This is from October. We will start to get the holiday data coming in very, very soon. I'm looking forward to seeing how consumers in North America are spending when there's this type of inflation, when there's this type of economy we got going on. Maybe consumers are doing good and they don't even care and they're spending. But we need to look at these folders and understand what's going on. So financial confidence is a leading indicator of consumer spending, which accounts for the majority of overall economic activity. Okay, this is coming from the conference board. If you want to read a little bit more on this, here's related stories. U.S. consumer confidence improved again in November. Why? What's going on? It's up 2.1 points from the 109.6. So consumers are getting a little confident with the economy. Why is that? This was leading into, think of October. So this was before the election. Why were they now that we have a new president, we want to see our consumers now gaining more confidence? Are they lacking confidence? What will go on? So these things are kind of clues, tells, help us understand what's going on with the consumers. We are the actual economy, consumers. Without us, the economy is nothing. It doesn't matter what type of fancy malls you have out there. It doesn't matter what type of fancy car dealerships you have out there. Without you and I, the consumers, those places will not make any money. They don't exist. So we are very, very crucial and critical to the economy. A lot of people think it's just the rich money is the economy. No, it's you and I. We are the real economy. This afternoon, we do have FOMC meeting minutes. Again, I spoke about this yesterday. Do not confuse this with FOMC, the actual meeting. That's December 18, where they have a federal funds rate here. You'll see 4.75%. Are they increasing, decreasing? What's the forecast? At 30 minutes later at 2:30 p.m. Eastern, that's when Powell will come out and he'll talk about it. Okay, so this is just meeting minutes, the summary of what happened at the previous month's FOMC. This is just a summary of everything broken down. This might provide a little volatility in the market. Make note at 2 p.m. We'll be done our call because I'll be putting winter tires on the car at this time. But if you guys are going to continue to trade this afternoon, make sure you understand it is a red folder there. There could be a little volatility with the US dollar and any security you're trading. Later this afternoon, if you go into the Tokyo, Asian, New Zealand, Australian session, you do have a fair bit of red folders for Australian dollar and the New Zealand dollar, okay? If you are going to trade that. And there will be volatility later in Tokyo session. New earnings. This morning, we had some consumers over here, retail corporations here. Abercrombie and Fitch, our clothing line. Best Buy, not very good. Look at Best Buy. Their earnings per share is down. Their revenue since the last quarter is down. I was saying yesterday in Canada, I can't speak for the US, but I've been reading articles that Best Buys are closing up shops around North America. That's not good. They're declaring bankruptcy, Chapter 11 bankruptcy. Best Buy. Remember these stores? It used to be Future Shop, Radio Shack. Back in the day in Canada, it used to be Radio Shack. Then it went to Future Shop, and then Best Buy. And no one is really buying electronics at these retail locations. They're going online and getting them delivered. I don't know. These places are closing down. There was one that closed down in my town over here. So the numbers speak for themselves here. Not very good. Will Best Buy move the entire markets? No, but it's a good indication of what's going on in electronics over here. After hours, yes, Dell Technologies. Is this after hours? This is a significant name. This is a name I would pay attention to. If you trade Nasdaq or S&P, even the Dow, just pay attention to this. This is a big name, Dell Technologies. They report at 4:05, 5 minutes right after Wall Street market closes. You got Dell coming in. They're estimating $2.06 per share. Revenue of almost $25 billion since last quarter. That's pretty good revenue for Dell. Let's see if they exceed it. Let's see if they disappoint and don't meet it. Analysts have given an upgrade over here, so we'll see if they can actually beat it. This will move the markets, the indices, a little bit. This is a big name, Dell. CrowdStrike, Workday, HP. This is all this afternoon after hours. You can see CrowdStrike is 4:05. Workday is 4 p.m. right at market close. You got HP at 4:15. So there will be a little volatility with these earnings this afternoon. Okay, and then tomorrow morning, if you guys are in the markets, just look at the names. Is there any big names? I don't see any big names over here tomorrow morning. Okay, continuing to go on, guys. Here at SST, we do have a Black Friday promo, guys. If you're looking to join the team or upgrade, we're going more long term as opposed to monthly right now. There's a yearly and a lifetime promo code right now going on for 50% off. So if this is, you wanted to join the team, and be with us for minimum of a year or lifetime with us. And we do weekend calls. We've done 3 sessions with the lifetimers now. We're going to do, keep that up. It's more private coaching, more mentoring, and being there to answer all of your guys' questions and being there for you guys. And also Yahoo Finance. There is some news in the market. Look at this. This affects me in Canada here. Trump pledges 25% tariffs on Canada and Mexico, deeper tariffs on China. So this is what he's saying, and I don't know if it's set in stone, but this is what he wants to do on his first day in office, is put a 25% tariff on Canada, Mexico. If you know, back then we had NAFTA, North American Free Trade Agreement. A lot of our production here in Canada was going into the US and it was free trade. There was no tariffs. This will, if he implements this on Mexico and Canada, this will really affect the U.S. neighboring countries that provide and produce. We have a large auto manufacturing here in Canada. We give to America, and if he's going to slap on 25%, that will really affect production here in Canada, not just in auto sector, but in everything, and that won't be good. That won't be good for the Canadian economy. So is he being a tough guy? Is he just bluffing with this, or is he actually going to implement this and put it in? Time will tell, and we'll see. But over all of these years, we've had North American Free Trade Agreement, NAFTA, if you guys know that. So this is big news, guys, but we'll see when he puts it into effect. So let's see what else is going on. So these tariffs are big in the market. Okay, Canopy Growth. If you're following the cannabis sector, Luke Mongo as its new CEO. New CEO in time, maybe when the U.S. is going to federally legalize, put the pieces, the puzzle together, and this is how I start to add up things. New CEO. I will read into that. Why did they can the other CEO? What does this guy bring to the table? What's going on? Things like that. Do some research. Any security you're looking to trade or invest in, or just read about. What else do we got going on? Kohl's cuts forecast, tariff impact looms. Dick's Sporting Goods post Q3 beat, raises its sales outlook. So sporting goods retail, Dick's reported they're doing good. Companies can't afford to wait and see Trump tariff impacts. Best Buy broadly misses earnings estimates as consumers pull back on appliances, electronics. So now here's an article to tell me what's going on with Best Buy. Why did they not hit the target? Why was earnings per share down? Why was revenue down? Now it's telling me right now, consumers pull back on appliances and electronics. Maybe there's more important things than having a fancy TV and having a nice refrigerator right now. Maybe it's more important to have food in the refrigerator right now. Maybe it's more important to have groceries inside of that fancy refrigerator. So instead of going splurging on a $2, $3, $4, $5,000 refrigerator just because it's got a screen now, maybe there's no food inside of it. So maybe consumers right now are more worried about putting food inside that fridge. With the high cost of food and groceries right now. That would make sense to me. Okay, so that's what's going on in the markets right now. If we look at the overall US markets, S&P is up 0.25% today. Dow is down 0.5% right now. Nasdaq is up almost 0.5% right now. Russell, the mid caps are down 0.6%. Crude oil is up positive 6%, and gold is consolidating up 0.5% today. Big names, Nvidia, again, very flat, up less than 0.5%. Ford Motor Company taking a little bit of a hit today, negative 2%. SMCI is down 10%. They've had, if you look at the last 5 days, SMCI has had a big run up to the upside once they got all their filing and their accountants paperwork together. It's gone up, but right now it's retracing back 10%. Okay, so let's continue moving on, guys. On YouTube, thank you guys everyone for joining. There's a free Telegram group right over here for you guys. It's pinned at the top of your YouTube channel. Gives you links to our YouTube, some trade ideas. Over here, recaps of the trade ideas before and after. Big sell on gold, 500 pips yesterday. Our schedule. Blogs over here. Okay, so this is what is a liquidity sweep. It shows you how it looks on the 1 minute, and then maybe if you're figuring out where is it equal, like a 15-minute fair value gap. There is a blog here explaining this. And our Black Friday promotion. So your yearly essential plan or your lifetime, you get all of these access to all of these for 50% off, and the coupon code will be attached to the website. Okay, let's get started, guys. Let's go into the charts right now. And we'll do gold. Okay, so I can see gold's daily candle right now. It's a spin top on the daily. The daily candle is undecided on where it wants to go right now. Maybe it's just kind of getting a breather after yesterday's big red candle. What impacted that red candle? What impacted that sell-off? There was some truce news. I don't know if that was what was going on between Hezbollah in Lebanon and Israel. That was released yesterday. Maybe that's what had gold sell off a little bit. Who knows what it could be? It could be various factors. Maybe it's not even that. Maybe it's just going into the American Thanksgiving long weekend, and there was some profit taking on this historic run on gold up to the all-time highs. Who knows what it is, but that's for us to dissect, read, research, debate what it could be. It could be many things. Maybe it was just a rotation, a sector rotation of liquidity. Maybe gold sold off, the market sold off. Now there's maybe cash on the sidelines. Where's that going to go? Where's that going to be injected in? What security, what index, what exchange? So for us to figure out. So let's do quick analysis on the daily. If you look on the weekly right now on gold, let's just start off on the weekly. Well, on the weekly, it's kind of barcoding. It's look right here, November 11 this week. It was red. And then it opened up the week of November 18. We had a big bullish week. Big engulfing week, and then this week it's coming right back down. It might go back up, it might come back down. We might consolidate for the next few weeks going into the end of the year. Now when we break it down to the daily, we can start to see. Here was last week, Monday, Tuesday, Wednesday, Thursday, Friday. There's your 5-day uptrend, very bullish, and it closed right at the high. And look, just yesterday. Yesterday took away Friday, Thursday, and Wednesday. It almost engulfed 3 days. So now it's kind of consolidating right here. So we'll figure out where this is going to go. So let's just start to do some zones that are easy on the eyes that we can see. This over here, okay, just below 2,800. 2,800 was our futures all-time high, but here on these Forex charts is showing 2,790. But that's an all-time high supply. Stretch it into the future. Who knows the next time we're going to come back up to 2,800 and revisit this area. But let's be prepared for it if it does in the near future. We've acknowledged all-time high supply. Stretch it into, I've got it into March of 2025. And then I can see last week we were trending up. It was very positive, and then they shut it down yesterday. So there is now the offers have been lowered right here. This is a lower high on the daily. It's also at a zone in the market. Here there was a demand zone. Or support zone, whatever you want to call it. It was holding here. It was red here, and it came back up green. It came back down red in the green box. It went back up green. And then now we actually had this red bar on November 6th, the day after the US presidential election. That's when gold sold. And in the next few days, it came right back up to that zone. But with the volume closing below, what I do is I make the zone red to represent resistance, supply, and in fact it was, and it kept pushing down. If we stretch this into the future, look at how last week's volume, all that bullish volume, came right back into that exact zone and got rejected heavily yesterday. So take this little smaller zone into the future. So you can see that they've lowered a block of supply below the all-time high supply. Does this make sense, guys? So they're lowering the offers. There was bullish volume last week on all 5 days, made higher highs and higher lows and higher highs and higher lows and higher highs and higher lows, and most of the daily candles opened ignited bullish, so they had the momentum, the volume was there, but right there yesterday is when they shut it down. You can visually and clearly see that. Now, where are we finding some crucial critical daily support? I can visually see it because the candles have printed already. So it's, like I said, it's easy on the eyes to see this zone right now. Now it's easy because it's already been printed. But that's why we kind of predict in the future how it will react at these areas by dragging these zones into the future. Now it's easy. Anyone on the call, I can get my 8-year-old daughter to draw a green box right here. I could tell her, if you see a green candle close above and then you see red candles come and they stop here, draw a green box. She can do that. She's 8 years old. And I can go a little further and I can tell her, Sierra, take that green box and just stretch it into the future. And don't stop there. Like you see today, how it made the low of the day is right at that green box. If she stopped right there, she doesn't know for tomorrow, she doesn't know for next week or next month. But the key, the secret is bring it into the future. Okay. Now I can see that this dip right here, they grabbed liquidity. There's a lot of pending orders down below this block. They came down there, and look at now when I'm starting to dissect and do my analysis at the end of the day, at the end of the week, now I start to visually see the weekly liquidity grab. Look here, how it closed red below. It came down for 2 days down there, and then a big rejection right here. And then it kind of stabilized right here at 25.60. And look at the big bullish candle that printed, and it closed back above that zone, that green box, closed above. And then that started last week's bullish trend up to yesterday. And then to me, that looks like where they grabbed all the pending orders. You know, when I say the money is below these zones, all that money was right there where they came down, they grabbed that money and brought it right back up. There's money above here. We're not here yet. There's still some money below here. Are they going to come down and get this money? Okay, there's a lot of pending orders below this green box. There's a lot of pending orders above this red box. There's also, we can see if we go into the futures and we have depth of market, we can see that there's a lot of liquidity sitting at the all-time high up there. Okay, are they going to ever come up and sweep it? Well, right now, the daily is showing us it's a lower high. So it's coming down now. Now let's follow yesterday's volume and today's. And let's see what's going on here. Okay, so we'll figure out some points of interest. Number one, yesterday was a really big, easy on the eyes, full body red candle. Okay, it's easy to see that. Okay, now what I usually do if I'm scalping 1 minute candles, I got to be quick. I look to see where's about 50% of that red volume from the opening price to the closing price, maybe right around there. But I also look, is it lining up with some physical candles to the left of the chart? What is going on there? So number one, if I don't want to guess, let's not guess. That's what a Fibonacci tool is for. It eliminates the guessing for us. Place it at the open of that red candle and bring it down to the close. Now it tells us exactly, there's 0.5, 2,668.49 cents. See my white line where I placed it before I put the Fibonacci? It's basically right at 50, almost right on point. Okay, now we have a little zone. One notch above, okay, is your next Fibonacci level, and one notch below is your next Fibonacci level. That's what we call the golden zone. That is now you've established a zone in that big red body candle right there. So the red body candle closed near the low, therefore this zone is red, and what I can do is, again, stretch it into the future. You can leave your Fibonacci if you like, or you can remove it. That's all your personal preference. But you see now how I kind of physically found maybe a bearish zone in here. If the buyers of gold bring it back up here, there might be a lot of sellers still waiting here to push it down. Okay, it could push down and then form a higher low and come cut right through there again. And then this will become, it will test this zone up here. And this will become a green block in here as it's accumulating the depth of market. If it's breaking through here, then the depth of market below us is accumulating. It might be accumulating with a lot of buyers and pending orders in here. Then this might act as support and have enough momentum to break through here and come up to our all-time high supply. Then it's making a higher high, a higher low, higher high, a higher low, and then that new higher high. Okay, so this is just a zone of reference. We're nowhere near this yet. Okay, we're nowhere near. This is just 2680, 2670 to 2660. We're nowhere near there. The price right now is 2630. So that's just maybe in case it gets back up there. Okay, let's continue moving. So we closed yesterday. It made that low of the day right there, 26.15, and then there was a little bit of a rally at the end of the day, and it closed 26.25. Now there was no gaps in today's open, so it opened right here where it closed. It opened. So this is a point of interest in my opinion. Okay, maybe not in yours, but mine. So what I do here at a daily point of interest is I place a yellow line. Sorry, I'll get rid of that white line. That was just to show you how to cut the candle. Now what I do here is yesterday's all of that red volume closed here, and today we opened here 26.25. Okay, that's a nice psychological number. 2600, 2625, 2650, 2675, 2700, 2725, 27. I can go on and on and on as much as I can count. Okay, so this is a point of interest on a daily. So I'm going to make it yellow. I don't have time today to write on the side in settings here that this is a daily point of interest and this and that. Okay, yellow is a daily point of interest. And what happened when we opened here? It was originally bearish. It came down red, red, red. We took out yesterday's low and it came right into our green box. The green box, I didn't guess where it was. I looked at about 50% of that bullish candle on September 20. I can visually see the past pullback came right into there and it went right back up. Then I can see when it came back down here, it broke it. It grabbed that level of liquidity and it closed right back above and pushed last week. And now we came right down into it this morning and right into the green box, and the buyers were pending there. They were waiting there, and it shows me that they pushed it up. So that is our low of the day down in our green area of demand. Okay, so that's our purple low. What is it? Let's see the number, 2605. So they're holding the 2600 block. And what happened when it came down there? The buyers were there and they pushed up all that red volume back up to where we had our point of interest of our open, and they physically had enough volume to continue to push it up, push it up, push it up, and made it right there. 2642 is our high of the day. Okay, so what I'm going to do at the high point wick is draw another purple line. So I have two purple lines. One represents the high of the day, the other one represents the low of the day. And what happened when we came up here? That's it. The sellers were there. Okay, so they're lower than 50% of yesterday's volume. So they're lowering their offers. Okay, and they absorb those buyers and they push them back down. And look at the volume. The volume is essentially virtually right where we opened. And this is what we call a spin top candle. It's a textbook spin top candle. There is a tiny bit of bullish volume, so this is technically a bullish spin top. But this is like a 55-45, 60-40, not technically a 50-50. But nobody has direction in today's volume. The buyers are buying, the sellers are selling. The volume is very thin. You can see compared to yesterday's volume. Look at yesterday's big body candle. Look at today's. There's virtually no volume. So this is representing to me a choppy day on all time frames when I see this. So this is where the market might be consolidating, it might be cooling off, the market might be catching its breath after last week's big bullish move and yesterday's big bearish candle. So today it's maybe just catching its breath. Maybe tomorrow it's going to continue moving where it wants to go, but right now, today, it's catching its breath. It's old. It's like me. If I go out and run, I'm going to be huffing and puffing. So it's catching its breath right now, but it might continue to move up bullish, or it might move back down bearish. So now we got to go to a lower time frame and figure out who is controlling the lower time frame right now. Okay, is there any other points of interest? Yes, there is one more. If we break this green block and the sellers are in control today, tomorrow, or the following day, if it comes down here, red, 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 just common sense, where do you think we're gonna go? Right here. Just look at the bodies, like this area right here. I can draw another yellow line. I can see here when it pushed up, it pulled back right around here, right around this yellow line, and then produced that big bullish 4-day uptrend. And then look at here, when they grabbed the liquidity, it stopped right there. Yes, there was that candle did the damage down there, right at 50% of that big bullish candle. So this is to show you guys right now how this 50% rule works with a Fibonacci. You see all these shitty candles? All this spin tops, garbage, red, green, red, green, red, green. This is like 2-3 weeks over here of garbage, of consolidation. This is where you can trap all this shit in here. And yeah, it's difficult to stay away from the markets for 1, 2, 3 weeks. We can't even get away from the markets for 5 minutes, let alone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days. We can't even get away from the market for 20 minutes, let alone 20 days. But this is to show you how gold can flag for 20 days. And look at how shady the volume. There's no direction. It's a bullish flag. It's accumulating. Finally, you get this big, massive bullish candle break out of here. When you see an unusually big body candle with heavy volume, you should do this 110% of the time. Take your Fibonacci tool, put it at the open of that body, and put it to the close of the body. And look at where 50% is. It will tell you 0.5 right there is 25.35. And if you want your zone, remember, one notch above, one notch below. There's your zone. Stretch it into the future. Now we can see exactly how that big red candle came red, 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 right into here. Did it tap exactly 0.5? It missed it by just a few points, but came in there and got right back out of there. So if it ever does come back down in here, hopefully you guys have stretched this box into the future, because it might come back down. Red, 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 right into here. That's where those buyers brought it right back up. Why would they not be right there again waiting for that discount buy? Unless this selling pressure is heavy and breaks this box. But that's one zone of interest I'll be watching. Okay, so you can see how you discover that with that big body candle that broke out of there. Okay, but before it comes down to that green box, you see here how I have this point of interest yellow line? Maybe it will come down red, red, red and stop right here and create a higher low, and it doesn't even need to come into this green box. Then I know that the buyers in this green box are increasing their pending orders right here. They're getting stronger for a reason. They don't want it to come down here. They've accumulated enough and they want to keep an uptrend. They want to keep the higher highs moving. They want to develop the depth of market up here to get volume to break it through all of this resistance. Okay, so you got to do some sort of analysis on the higher time frame. Even if you are a 1-minute trader, you got to understand psychologically what is going on a higher time frame. Yeah, you can just jump in these markets and start scalping 1, 2, 3, 5-minute candles, but it's better to have an overall understanding of what's going on. Okay, so this afternoon, gold could continue with buyers and fill up the wick and maybe test the high of the day, or sellers could push it down and fill the bottom wick and have selling pressure coming down here, or it can just kind of trade around here. Now when we go to the hourly, we'll see exactly what's going on. Let's jump into 60 minutes now. So these are the hourly candles. We can start to see the big move was 6 p.m., 7 p.m. Sunday, started that sell. Again, it came up during the London session. And then when did they hammer it down? Was Wall Street, 9 a.m. They dropped it. And then going through the Tokyo session, it was still making lows. RSI was completely oversold. There was a little bit of bullish divergence, but it still hasn't really developed yet. So there is still a lot of selling pressure. But if we can see on the hourly, it is making a higher low right here at 26.13 from the low of the day. It is making a higher low. Again, this red candle here at 9 a.m. is making a higher low as well. So there is a little bit of an uptrend on the hourly. If we do a trend line, you can do a simple trend line like that, and it's showing a higher low and a higher low. It is slowly ascending, but every time they come up, they're getting pushed down. Where do we have majority of hourly resistance? Well, let's look where we have some bodies right here. I'm going to draw a white line for hourly now, okay? So I can see this white line, I use it 26.33. I can see that big bullish hammer candle right there at 6 a.m. should have broke this out, but they kind of brought it right back down. This move right here at 8 a.m. COMEX was, and that's what created the high of the day, but it was just an impulse break, and then they brought it right back down. So I can see above this white line, there's a lot of impulse breaks that don't close with any green volume above this white line. We touched it right there at 9 a.m. We touched it right there at 10 a.m. Can we get any hourly positive volume to close above this white line? We'll see in the next little bit. Maybe it just kind of consolidates in this area. So you can see it's consolidating from the hourly resistance and that daily point of interest. So this is where our hourly volume is contained right now, in this zone. And you can definitely trade this zone all you want, or you can just wait patiently to see if some green volume will end up closing above here, or red volume will close below here and maybe break the trend line and come down in here. Otherwise, it's just accumulating right now. You can look for some trades in here, measure your zone so you know from the top to bottom how big it is. It's roughly 80 pip zone, okay, from 26.25 to 26.32.33. It's 70, 80 pips. It's good for scalping, but if you're looking for more of a intraday swing position, you got to allow this to accumulate. So two parties now are accumulating. Sellers are accumulating, buyers are accumulating. At some point, the volume will squeeze out of here, maybe physically close and not be an impulse, retest this, and we can try for that high of the day and maybe move up to the bottom of that supply zone. That would be bullish move on the hourly. Or sellers step in, they absorb all the buyers, they push it down here, close it below there, maybe retest this point of interest, this yellow line, 26.25, and then they start breaking these lows and then bring it back down to the low of the day. And we see what happens down there if the buyers are there waiting. If it's coming down with heavy selling volume, it might cut right through this zone and start to come down in here, but we've already marked our next daily point of interest is 25.60, and then our next big daily weekly demand area is right down there. But this is what we got for gold right now, so can't force anything. This is the volume right now. What we can also do is go into the smaller time frames, 5 minutes, see what's going on. All of the 5-minute volume is kind of inside this hourly zone. Look how shitty it was over here. Like even the 5 minutes, green, red, an impulse break right there, came back down. Then you had a big body candle when at 8 a.m. time of sales, bigger hourly candle, break through. That's what made those tweezer top high of the day. Now I can see at 8:10, 8:15, then they bring it right back down. Here's now COMEX market open. They bring it all the way back down here, comes back up, lower high, drop it, break it, and this is where we are. So right now, if I'm studying the 5-minute candles, the 5-minute candles inside this hourly zone are making some structure themselves. I can see that the 5-minute candles are making a little area of support right here. And I can stretch this little green box into the future to show me what's going on the 5 minutes. So you see how this area is support right there. When it broke up, it came back down. It tested it, the buyers were there. It came back down red and they were there again. It came back down red. It broke there impulsively, but now they're pushing it right back up. So this is support. This might turn into lower time frame demand. I stretch it into the future to see if it will keep coming back in here, but it is making a higher low from over here. Now we do have some resistance in the market. Where's our resistance on the 5 minutes? Well, we can visually see. Here was some type of support right there. Then it broke down red right there. So that would have been a red zone. If I stretch that into the future, I can see that they impulsively broke it above there. Then it came right back down, but did not break this structure. Now we're again breaking right out of this. So we'll follow this 5-minute candle right now. It's closing in 7 seconds. So let's see if this will close with volume above. And if it does, what we'll do is this zone right there, closed above. Let's flip this to green right now. Stretch it in. So I can see now, let's see if this will develop as a base of support above this one. Then we know that the 5-minute depth of market is building. So you see now how it just came down red and just tapped it. See how it came down red, 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 tapped it and went right back up. So if we do build, it should break this high, but look at the previous high. It was green, 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 where it came up to that hourly. Let me get rid of this hourly consolidation. So there's our hourly resistance. It's got a big wick to fill. Okay, it's not a small wick. So in order for it to fill, it's got to fill all of that wick. So maybe it needs to build or consolidate right up here. Let's watch this. Okay, before we move to Nasdaq or US30, let's just watch what's going on gold on the 5 minutes here. Okay, and then our key point is up here. If we can get up here, this is hourly resistance. You see how many times they rejected it, and then there was just that big breakout right there just before Colmex, and then it came right back down. It tried it again. That's where they rejected it. So we might be coming one more time to try up here. But let's see if the sellers are really, really tough up here. If they keep pushing this down, then I can see lower highs, hourly resistance. And this is not the greatest volume to be trading. I want to make that clear. This is tough volume to be trading in here. Okay. What do you guys think? Is anyone looking for buys? Is anyone looking for sells? Is anyone in a trade in gold right now? Or are you just on the sidelines figuring out what's going on? Sidelines. I'm on the sidelines right now, but I might get my feet wet if I see something I like. Okay, so now what happened? Like, let's talk this so it's not a surprise for anybody. Did we break the previous 5-minute high? Okay, this is a question. This is like a quiz for everybody. There's a yes or a no answer. I'm not tricking you. Did this candle that just opened up on the 5 minutes, did it make a new higher high from the previous 5-minute candle? Yes or no? That's it. There's no trick here. The answer is no. If you guys are shy and don't want to answer, I'll answer it for you guys. It opened and came up green, 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 but you see we didn't even take out this little wick. Okay, so that's showing weakness on the buyers. Okay, and then if sellers sense weakness, they can step in and push the market down. So they're pushing this volume. See, it didn't create a new high, just for a few pips, for a few points, for a few ticks. That's all it takes. And then you see how now they're pushing it red, 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 but now we came right into about 50% of that big green candle that closed above. So if I grabbed my Fibonacci tool and I did it from the open to the close of that last 5-minute green candle, let's see technically where it just pulled back to. It came red, red, red. Look, touch that white line. The white line is 0.5 exactly. Okay, so it held there. It came up. Initially it held, but remember this is a 5-minute candle. Okay, so a lot of things can happen in 5 minutes. It held there one time. Then the buyers brought it up, but then this selling volume is heavy. So it came right back down and pushed it again. It made that new lower low, and now it came a little deeper. And now you see the buyers are bringing it right back up, and sellers are pushing it down. This candle has 1 more minute to go. Where will it close? Will the sellers be in control and close it near the low? Will the buyers come back in? Look at that. That was a good big bid that just pushed it back up. But you see how the selling volume is still absorbing all of that. So you see where the tug of war is right now? It's right at that 50% psychological level. Let's see who will win the battle of this candle. And then we can also tell by the majority of the volume, okay? So you see, guys, how you can use that 50% rule on any time frame, on any candlestick, on any security, okay? Look at now the sellers are in full control. They've got the volume right near the low. They're creating new lows, okay? So if it closes below here, this zone again, we make it red because this might turn into brief area of offers and supply. If the buyers are buying into it, okay, so you see how it closed below? That green box right away. This is a choppy area to be trading, but now this represents, again, resistance. You see, that was a fake out. Where those buyers brought it up there, they got faked out, and then the sellers brought it right back down. So we're right back in this shitty consolidated area where you're just going down red, coming up green, coming down red, going back up green. Now, let's see price action. We've got tweezer bottom lows. Those are clues. Look at those two lows are equal. Those are equal. It's not a new lower low. So the buyers are stepping in here and they're pushing it right back up where into that supply area, and then the sellers are pushing it right back down. Okay, so this is where you get sideways, choppy, shitty price action. This is not easy to trade. This is not even easy to scalp. Like this, you gotta be super fast to get in and out of this. Otherwise, let's wait and wait and wait and see what develops. You see there, the buyers held it there. They came into there, and you see the red box pushed it down. Now when they were down there, again, they just got another injection of green volume. Another big pending order came in, came up, and the sellers are still there pushing it right back down. So, you know, like it's bar by bar analysis, but you get to understand what's going on with that volume inside that candle at this time exactly right now. So, you know, when I'm at the start of the call, I said, guys, we need to figure out what is good volume to trade and what is shitty volume. When it's volume like this, maybe it's okay to step away from the markets and not trade this. If you want to be a spectator and observe, 100%. Let's see if we figure out any clues or what's going on. Who will accumulate more? Who is the bully here? Who is winning this battle? It's hard to tell right now because the depth of market is still building for the sellers, but this for the buyers, but the sellers are really not letting the buyers get above here. You can tell by the lower highs. You can tell by the zones. So now it's a shooting star candle. They absorbed all of those buyers. So if you were buying gold, you got absorbed by all this selling pressure, and it was a shooting star candle that broke that tweezer bottom low. Remember that red line that was holding the tweezer bottom? Now the shooting star candle is breaking right through there. Where will this body close? Half of it is exhausted. We still have 2.5 minutes to go. A buyer could step in and bring it right back up, or it could come all the way down, bleed red, maybe down to the green box. Okay, I know it's not the best area to be trading. Like, look at this. We're still all said and done. We're still like in this kind of consolidated area. Like this is where we are. We haven't moved out of this box. Yeah, it's been exciting where the green buyers brought it up there and the sellers brought it down there, but the entire story is we haven't even moved out of this box. Okay, so we're still consolidating, we're still accumulating, and this might be gold just how it's trading right now at this time. So sometimes when I see this, I'll either stick with this security and keep paying attention, looking for clues, sticking with this, or I'll just altogether move on to another security. So I'm going to ask you guys, do you guys want to stay with gold for the next little bit, maybe 12 more minutes to go to noon? Or do you guys want me, while this is consolidating, we move on to Nasdaq or Dow Jones and do an analysis there? Maybe we might find better volume to trade. Maybe we might find a better security. But if that happens, we might miss out on a quick little scalp on gold. And then once we do that, I will bring both charts side by side, split screen, and then we can observe both. But guys, just understand that you could get a developed move of buyers bringing it up here, flip that zone green. If they respect this, it could come up to that hourly resistance and fill that wick and move a little higher. That's a possibility. But there's also a possibility that the sellers could continue to push it and break this green block, sell it, close it below here, switch this green to red, retest that, it's all offers, and then we're shooting down to the point of interest down here. Or it could just continue to trade and accumulate in this box right here. Okay. For me, it doesn't matter. I can stick with a shitty security and go bar by bar and figure this thing out, or we can just move on. Okay. We did Nasdaq yesterday. A lot of you guys are Nasdaq. Okay, I'm going to listen to you guys. This is the last time I'm going to listen to you guys. If we're going to do Nasdaq and I figure out Nasdaq is garbage and US30 is moving, Ron's going to be taking control. Okay, so I'm just playing. I'm just joking. I like to trade US30. It's my favorite security. It's a love-hate with Nasdaq and Dow, but I respect you guys and love you guys. Let's take a look at Nasdaq. Okay, if you're following gold, just figure out what's going on. Try and pick up on some clues. So you remember they broke that tweezer bottom low, but it still made a higher low coming back in. Now you got an ignited green candle. These are clues. The way how it opened ignited. There was absolutely no pressure to push this candle down. It's still coming up and fighting all of this resistance. Okay, gold it is building. Now, if you look at it, higher low, still above 50% of this big candle. They grab some liquidity down there, still holding this green base. But as it comes in there, again, they're pushing it right back down. Okay, so let's do Nasdaq quickly. Okay, and I'll do it fast. And then what we'll do is we'll leave these two side by side. We'll leave gold over here on the right, or sorry, the left, right over here. And we'll look at Nasdaq. Dow Jones is making a nice move, higher highs and higher lows. Let's look at Nasdaq. Oh, look at Nasdaq. Come on, guys. You guys want to look at this when we've got US30 doing this? Oh, man. Okay, but I'm listening to you guys today. Let's do now. Okay, but also pay attention, gold sellers. It came in the red box and they're pushing it down. You remember, play it back. That bar opened ignited. It was strong on the open and now sellers have some control. Look where they'll close that bar in the next 3 minutes. Could be a clue. Let's do Nasdaq quickly here. Again, look at the 5 minutes. Holy shit. Look at how garbage this is, but let's make some sense of it. You never know. Maybe we'll do this charting and we'll get a good opportunity. This is Nasdaq on the daily. Okay, so some key critical zones. Hopefully all of you guys can understand where the all-time high supply zone is. Right here, bring it down to the body, stretch it into the future. We're not too far away from testing the all-time high again. Okay, is there another zone in the markets? Yes, there is one that I can visually see because the candles have already printed. So right there where that came into there, they pulled it back, stretch it into the future. I can see when it came in there, back down, came in there, back down. Now we got a nice big body green candle close above there. Let's make it green into the future, and I can see now that red wick came in there, back up, came in there, back up. So this zone below me is green. Yeah, you're right, Miss Jaquel. It's garbage, but we'll see. Maybe we can turn garbage into some treasure today. Who knows? What is that saying? Everyone's garbage is someone's treasure. Is that how that saying goes? So maybe this Nasdaq garbage can be someone's treasure today. No, I'm just playing. If you love Nasdaq, I support you. It's all good. But Dow, for a scalper, that's where it's at. That's where it's at. Coming from a scalper, I'm just telling you. If you want some quick points, some quick pips, look at your Dow candles for scalping. Okay. Let's take a look here. What do we got going on? Okay, I can see some choppy candles. Like, look how clean it was trading over here this week, and they brought it right back down. Now we're getting this, like a spin top, pushing up, spin top. So a lot of inconsistency with Nasdaq on the daily, but we can still make some sense of this. So what we can see is, let's go with today. Yeah, there's money in garbage. So I go wherever there's money. Okay, if there's money in garbage, we're gonna trade garbage, whatever it is. If there's money in something that's really good, like Nvidia or something, then we got to trade that as well. We follow the money, okay, wherever it is, or we follow the garbage, but we got to make sense of it. So what happened yesterday? make sense of yesterday. So we opened here, it came down red, red, red. Nasdaq pushed, was a bullish day, came up here, 21,000, we kind of broke that, and then it came back down, and again closed with a little bit of green volume, not a heavy candle like this, where we could do our Fibonacci, we could figure out who's majority winning that candle. It came back down here almost where we opened, and didn't really tell us anything, but there was still green volume. Today, where did we open and where did we close from? So points of interest on the daily, right here. Let's place a yellow line here. Why yellow line here? Because that's where we closed yesterday and that's where we opened today. Now, what happened when we opened? It came down. It was originally bearish. It was red, red, red. We took out yesterday's low and we traded right into about 50% of Thursday last week's green volume. Let's draw a purple line. So I can see my low of the day is still higher than here, still respecting the green box. So the buyers are still here. They're still here. The buyers haven't disappeared. And then they pushed it all the way right back up to where we opened, and they flipped the candle. They flipped it and turned it very bullish. We were at some point a daily hammer just below 21,000. So that's our high of the day. And what happened when they got it up there? You can see they didn't have enough to fill yesterday's high. We're still below about 50% of this red candle. If I grab my Fibonacci and I put open close, I can see about 50% zone and draw a red box across. We traded right into that red box. And what happened when we got up here? They rejected it and they're pushing it down to where we are right now. And there's still green volume. Now, where are we trading at? Look at the base here. There was a red candle that closed here, and this ignited bar, this is a daily point of interest. A candle closed here, and this candle opened, ignited red, and just dropped. So that's a point of interest. Whether you like it or not, I'm going to place a yellow line here. And that is exactly where the volume is trying to trade at right now. So will we continue to fill this wick and break for a new high, or are the sellers going to come in here and start pushing down this green volume? Now, I know this is all of today's volume right in here. What I can do now is I have 2 points of interest. I got a yellow here and a yellow here. I could take it even further. I could cut to this green volume in half right there. I smoked a joint. Probably you did too. We can see that that's 50%. Okay, even us who are high here, we can see that. Okay, so if it comes down red, 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 I expect buyers to hold right here, 20,875. If they're not there, then the next point of interest is where it opened. If they're not there, then it will keep bleeding down to our next point of interest. I'll hold it right there because we gotta continue moving here. So today's candle, if this was like a 5-minute candle, it's like some indecision too. What's going on? Remember, we got Dell in the after hours. Okay, that might bring in some volume to move this thing later on after hours. Let's see how we're moving on the hourly. Okay, so what is the hourly doing? It came into the green box. When it came back down here, higher low, higher lows. Again, the low of the day today was at 8 p.m. futures market open right here. That was the low of the day. And since then, we've been making higher lows and higher lows. If you want to draw like an hourly trend line like we did with gold, you can see it is slowly trending up, slowly ascending. But every time it comes up here, they're pushing it down. It made the high of the day today at Wall Street and they pushed it down. We came up again at 10 a.m. and they pushed it down. We came up again right now and they pushed it down. So lower high, lower high, lower high from Wall Street. So you can see that they are descending. They're putting more offers in. But when we come down, we're not really breaking support. So that's why we're getting shitty sideways volume. It's both parties are accumulating. Buyers and sellers are accumulating. Are we moving anywhere? Do we have some points of interest? We're right here. Here's an hourly point of interest. Just like with the daily, there's a critical body that closed right here and opened right here. This was critical times. 8 a.m. on Monday. This is Wall Street on Monday. So right there, I draw a white line. White represents hourly for me. And then I can start to make sense of what happened at 9 a.m. this morning. They broke that hourly resistance. That's what made the high of the day. It's still lower than yesterday's high. So that's telling me lower high. They pushed it down. It came back up there at 10 a.m. They rejected it right there at that hourly point of interest. It came back again this hour, and it's now even lower than that white line, okay? And every time we come down here, it's got a wick, a wick, a wick, a wick. So the buyers are still here. That's why we're getting green volume, red volume, green volume. Who will win this tug of war? It's very similar to gold on the 5 minutes, okay? So let's look at Nasdaq on the 5 minutes. Oh my God, this hurts my eyes. I can't even look at this shit. I need to put on sunglasses right now. This is disgusting. This volume, I'm telling you, at the start of the call, I said, guys, if we see shitty volume, walk away. If I was not on the Zoom with you guys or YouTube, I love you guys, I would have walked away myself from and go put on snow tires on the neighbor's car, and my dad's car. I would have been putting snow tires on right now. There's no point in wasting time trying to trade this, unless you're figuring out what could be the bigger move. But if you're trying to scalp this is very, very difficult. This is difficult to trade on any time frame, okay? But we can make some sense out of what's going on right now. I see a double bottom, okay? There was one bottom right here at the yellow line, and then our resistance, our neckline is all like right around here. It came back down. There's the second bottom where that big bullish candle just printed. It closed above that yellow point of interest, okay? So we need to build off of this, and maybe we can continue to fill up to this white line and maybe come up to that high of the day. But we're battling a lot of selling pressure, because every time they come up, okay, right there is where you see 945 is where they faked out the buyers and brought them down. It came back up right there at 1045. They came back down. It came back up. So there's lower highs, lower highs, lower highs. You can even draw a trend line on the 5 minutes showing a trend pushing down like this. Now we kind of physically broke the shorter time frame trend line right there, the 5 minutes. So we got 5 minute volume breaking above it. Now let's see what's going on. So are we holding 50% of this base of this candle? Yes. So let me just do, it's a nice candle, but let me just do this, okay? So that big base body candle, that second body candle, open to the close. Where's 50% zone? Let's figure it out on the 5 minutes using our Fibonacci, just in case we retrace back down in there. This area, okay? We want to see if we get a pullback inside here, and maybe we'll get some bigger buying volume in here on a pullback. So you see how I did that? I found the fair value gap. I found what was still pending in this body of this candle. I can see the last red stopped right there and pushed right back up. If we do come back down, deep down in here, we'll see if this green zone can continue to hold for buyers. That was another fake out. Again, did it make a new high? It opened and it came up green, 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 and didn't even break above that wick. So the sellers now did not allow a higher high. It's a equal high or lower high, and they're pushing it right back down to retest this yellow point of interest. It didn't hold, so now it's coming back down. Let's see how far down it can come down to. Let's see if anything develops out of here. Now we're at this key point of interest right now. So I'm going to put these two side by side, Nasdaq and gold. Okay, so gold, now we're back down to the green box. Okay, so Nasdaq is on the right, garbage price action. We've got gold on the left, pretty shitty price action. But I can see that that bearish candle came down, closed, opened, ignited, and came right back down. So if you're looking to just scalp kind of from here down to there, or buy from the green box up, you just measure it and know what you're getting yourself into. If not, you avoid this at all costs and just keep observing. Let's see if the buyers will step in on Nasdaq right around this yellow line or the green box. Let's see if the buyers of gold will step in here at the green box, or the sellers have absorbed enough and ready to break the neckline. I look at this as a funky M pattern, okay? I smoke a lot of weed. So it came up there, came back down, came back up. I look at all of this garbage as an M pattern, okay? That's what smoking weed will do to you, right there. So a lot of people will say, Ron, where the hell do you see an M? I see all this. That's how I see an M pattern, a funky, crazy M. Came up there, back down. All of this garbage down here looks like a bottom. They brought it back up. All of these highs look like coming back down. So now we're trying to break the neckline. You're not always going to find a perfect M or a double bottom. Sometimes you're going to have to filter through all this shit, and then you might figure out what's going on, okay? So this candle's closing in 55 seconds. Will the sellers have enough pressure to close it below this green zone, or are the buyers going to bring it right back up like they did over here? Okay, so let's pay attention. And Nasdaq is coming down red, 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 right back down into our green box. Will we find some buyers in here to bring it back up and grab more volume? Now it's trading right in there. Okay, so it took out the low, and now we're right deep, right into our green box. Let's see if it will hold. We got now 25 seconds to go across the board. The last 30 seconds show who has momentum going into the close. This is a tough afternoon, guys, for these two securities in particular. There might be other securities that are trading fantastic, but this is what we chose today, and this is what the market is giving us with this volume. Okay, so I don't like playing the woulda, shoulda, coulda game. This is what the market's giving us. Let's make the best of this. Let's figure out. This is real trading now. We need to decipher what to do with this. You know, you're going to get days like this too, where you're going to have to figure out what you're going to do with this type of trading volume. Okay. And it's not a bad choice to also sit on the sidelines and think about how many mistakes we could have made in here. Think about how frustrated the buyers are. Think of how frustrated sellers are. You know, like there's a lot of frustrated traders right now. And what do you do when you're frustrated? You tend to make mistakes. You tend to revenge. You tend to get pissed off. You'll put up another trade to make up what you lost. And then before you know it, you could turn this trading into a disaster. When you didn't have, you could have avoided this at all costs, okay? Okay, so did we close red below the green box? We, in fact, didn't. We closed right into it. So this could be a red impulse candle that's breaking down. And this is where it's the hardest thing in trading, is to ask yourself, do I sell right now, or do I wait for this physical body to close? That is something that you're going to have to figure out. I cannot figure that out for you. Okay, because a lot of times if you take an impulse trade before the body closes, you don't know what could happen down here. It could come big red candle and you go into a sell, and then all of a sudden it comes down here and picks up a wick, and then it shoots right back up. And you took the trade before it closed. But sometimes we wait for it to close and then it drops all the way down here. So there's also a time and place and using intuition when you should be trading impulse candles. Right now with this, I see that there could be a lot of fake outs. So I want to avoid impulse trading at all costs right now, because I can just see the character of the market right now for gold. It could be faking out, and look at all the fake outs up here. Look at all the fake outs down here. This could be another fake out. So if you go prematurely and take that sell, you see how it could come right back up. So in my opinion, the best thing to do is wait for the body to close. Yes, you might miss out on an impulse trade. Who gives a shit? There'll be another trade to be made. Do you guys understand that? Like, that's coming from me, who's a scalper. This is the hardest thing for me. I'm telling you the honest to God truth. You know how hard it is for me right now to not hit the sell button on gold, because it could bleed out right down here. But sometimes when I do that, it reverses and it comes up here and I'm in drawdown. And I'm like, fuck, why did I take that impulse when I could have waited? So this is a battle you're going to have with yourself. It's your own mind telling you, should I take this? Should I not? Sometimes what I tell myself is, better just wait for it to close. I might miss out on a quick little scalp, but I think about the worst case scenario. What could have happened if I took that and it reversed on me and faked me out, and then I'm in drawdown? See that? That's what I mean. Sometimes you're going to miss out on a red body candle, but you also have to have a plan. If you're trading that red body candle, what are you doing? Like, I trade completely different from some of you guys. If I take an impulse candle and I know I'm taking it on impulse and that thing drops right now 15 pips, I could be completely done with that candle and get in and out, because I know it could come down there and pick up a wick and go back up. Okay, so happened to me on the live yesterday. I took the first trade on gold. It went up 15-20 pips and I didn't take out anything, and then it came and hit my stop loss. So these are those things that you have to mentally know personally how you trade, not how your neighbor trades, not how your friend trades, not how your cousin trades. It's how you trade. So what do we got going on with Nasdaq? It came into that little fair value pocket and we got a nice green candle printing. Will it have enough momentum in the next 60 seconds to close back above that yellow point of interest on the daily. Remember, this is a higher time frame. So now we see the 5-minute buyers on Nasdaq are there. They're respecting the box. Can they bring it up and close it above this critical yellow line? Let's see. And then that might develop more green volume, and maybe we can look for that buy up there. But we see it's respected our green box right now. If gold closes red below here, we got to flip this green to red, and then maybe we'll get a pullback sell at the red box. Okay, so just think about it. Maybe we miss this sell right now, quick little sell, but maybe we'll get a pullback sell at the zone. We'll see. This is the first body candle that could physically close below this zone since 10:30. And right now, what time is it? 10 after 12. So it's been almost 2 hours here. Do you guys like this split screen style better than flip-flopping? I personally prefer it like this because I can talk about both securities and I can do my thing. I just don't like flip-flopping from one security to the next. I can do this. I can even do 3 securities if you want. Tomorrow, if you guys want to try it, we can do 3 securities. I can do gold, I can do Nasdaq and US30. I can do 10 securities if you want, but I just don't like flip-flopping. I like everything visually on one screen, and then I can see what's going on. So green, let's go through the motions. It closed red below, yes. So that green zone now is momentarily, it is an area of resistance. Now the buyers are coming in. Why? Why are the buyers coming in right now? Because it closed down there, so it's at a discounted area. So the buyers might step in, and the green candle is showing us. How far up will it go? Let's see. There. So about 50%, just a little higher, and then now the sellers absorb them. Let's see. Will this turn into a red candle like a shooting star? And will it come? That's a daily point of interest. Nasdaq is, look how Nasdaq is kind of consolidating right below that point of interest and our green block. Look how tight Nasdaq is coiling up in here, right there. Okay, so no new lows were created. We have a green body candle printing coming back up. I'd like to see the retest if it can come up to this red box. So here it comes back up. So that's that what I was telling you. If you scalp that red candle and you got 10, 15 pips out of it, did you secure? What did you do? If not, you can see a green candle could come back up. Okay. So Nasdaq is still red, green, red. We got gold coming right back up. Is this going to be a fake out? Like, that's what I want to see. Are they going to fake out the down here, bring it back up, close it here, and then we can look for a nice buy coming back up? Or is this actually physically setting up to sell? It came back up there green, and they rejected it back down. It's coming back up green. Pay attention to the volume, coming right back up. We still have a lot of time, 2 minutes and 45 seconds. That's a ton of time. Anything can happen. Ms. Jaquel, have a great day. Thank you. Yeah, come back to the market after the news and see if there's a setup. There will always be a setup. That's perfect. I love that, how you can walk away and look for another setup. Otherwise, you're going to be stressing out with us looking at this stuff. And this is pretty difficult volume, guys. Honestly, like, you guys know me. I'm a very aggressive scalper, but this is when I got to show a little bit of restraint. Okay, so red, green, and look at no green volume closed, and look at where they rejected at that yellow point of interest. Now we're coming back down red, but we have our hourly trend line right there. How will it hold? Will it hold? Gold came up there, back down, still have an inverted hammer candle with some green volume. Whoever said trading is easy is a liar, a full liar. Trading is very difficult. Like, look at what we have to put ourselves through. Trading is very difficult, but if you're patient and you're disciplined, maybe you can make it a little easier for yourself. Okay, so the buyers are still there. They're coming up. Now I'm going to be a spectator. Where they're going to close it? How is it going to close? We got 60 seconds. Nasdaq is pushing down. Can it close below this green box? So it just initially held on one candle. We didn't get any more support coming out of there on this bar. And then it's still in this choppy neighborhood. So could just be trading sideways still. Okay, so now it came back up there. How many times have you guys calculated in your head how many times they've rejected it up there? I have. Okay, so it's been multiple rejections. Every time it comes up there, they're rejecting it. Yeah, about 5 times, Armandi. Yeah, so guys, pay attention to that too. Don't just look at the candle, okay, just to say you're looking at it. Pay attention to what's going on. How many times did it come up there? How many times did they reject it? How many times did it come back up? How many times did they push it down? That all plays into effect, and it tells you, oh, the sellers rejected those buyers 5 times up there. So that could be exhausting the buyers. Okay, now that Nasdaq candle, that was a big body candle, flip the green box. Look at how naturally it's right at that 50%. Okay, so you see how that green box, I didn't change the size of it. Now if we come back up green, let's see if it gets rejected here. Maybe we could look to sell Nasdaq below this point right here. Also gold. But you see how close we are to this daily point of interest where buyers could step in at any moment. Okay, so now we're pushing down red. We'll get a reaction at this yellow line. We got one right here where it broke down and came right back up green. Here it kind of faked out the market and came back up green. Is this going to be another fake out, or are they actually going to really drop the market here? Okay, so this is where we got to be kind of cautious to watch right here. Let's see, because I can see a fake out right there at 9:25. I can see a fake out right here around 10:15. I can see a fake out right here at 11:45. Is this going to be another fake out around 12:15? Okay, so in here on gold, we came down, it's rotating right back up. Is this going to be where they grab some liquidity and bring it back up, close it above here, and maybe we'll look for that buy? And then we know that they came down here and grabbed some liquidity. Or is it going to just bear flag and consolidate below this supply zone, and it will continue dropping through here? Okay, so again, I'm just observing. I know it sucks. Why is this guy observing so much? And then this, yes, this could possibly break and drop a little bit. But again, do we want to go through that and take an impulse? I would like just the sellers to show me that they're actually strong and can close it below here. Because this time, and this time, 3 other times, they didn't have the ability to do that. So this could be another time where it comes down there and goes back up, just like how gold is. And then I pay particular attention at the yellow line because I know that that's a daily point of interest. So it's not easy to break this. Okay, and gold, okay, there was just that brief drop and it's coming right back up. So are they going to scoop that liquidity and come back up, close it above here? We flip this red box green. We might figure out where's 50% pullback on this green body candle, and maybe that might be our buy entry, okay, on gold. So let's just play it out here. We got 2 more minutes. See that? Nice big body candle coming trading right back into the red box, and they pushed it down again. And normally when I go to Tokyo sessions, guys, I kind of reduce the Tokyo sessions. I do 1 webinar on Wednesdays. What I'm going to start doing 2 to 3 sessions on London. I'll go back to doing London sessions. You'll see, Ron very, very tired, but I'll be maybe starting 2 or 3 times a week, see how it goes for 2 weeks. Then we go back to New York, post New York's for 2 weeks. Have a Tokyo one webinar during those weeks as well. So guys on Zoom, I'll be coming in, and I'll be doing some London sessions with you guys. I don't know if it will be Monday, Wednesday, Friday, or Tuesday, Thursday to get started, but we'll put some London sessions back in the schedule. I'm not 100% if I'll go on YouTube at those times, but I'll figure that out. We'll take it day by day going into the new year, see how things are going. Again, it's hard for me because I don't go to sleep till midnight. So some days maybe I'll be pulling an all-nighter with you guys. We'll take a look at that time. We'll look at gold. We'll look at DAX. We'll look at the German exchange. We can do some Forex at that time, pound, euro. Okay, so here we go, guys. Nasdaq is right at that point of interest on the daily. Gold came back up there and they rejected it back down. We're still in this pocket. So again, it's still flagging in here. What time is it? 12:20. Okay, this might be, if they push it down, this could be a break of this point of interest and drop red down here. We'll see right now, but pay attention to how the candle opened. It opened ignited green with some momentum and coming right back up. So do you guys understand, like, how long have we been on this call together? For an hour and a half? And you see how the volume is not the greatest, not the greatest. Okay, so we don't want to just force a trade just to say that we're in a trade. It's, again, we got to look for the best available setup. And some days this is how an afternoon goes, guys. I want you guys to understand that this is common. If you ask me, I go through days like this. This is common. Don't think that this is, like this is not going to happen every single day. You're going to see there's better days to trade, but these are days to learn. This really can teach you patience, discipline, how to avoid taking an impulse candle. Teach yourself, if you did take the impulse candle, what would you have done? Would you have pipped? Would you have dipped? Are you still holding? Are you holding at a loss right now? Is it developing for you? Did you give yourself enough area to breathe, like with a stop loss where you're not panicking, reducing your risk in situations like this? Okay, now I see things are breaking down with 3 minutes. Nasdaq now it came as a shooting star candle. Gold is breaking down. Let's see. Gold can actually break down and close. It's coming really, really close to our daily point of interest. So this is where something will develop. We've got Nasdaq, something developing right here. Again, it came back up. They're pushing it down. Came back up, pushing it down. It turned into a shooting star candle just for a moment, but still holding the yellow line. Here we broke. Might be coming back up. 2.5 more minutes to go. Is this structure breaking down over here on Nasdaq and we'll get that drop? Right now we've got volume below the trend line. Okay. If I'm going to get into a potential sell on Nasdaq, I'm already thinking, calculating where I'm going to put my stop loss. I'll place it somewhere maybe in the red box, just above the red box. I'm calculating how many points. If I sell below 875 and then I'm at 895, then that's about a 20 pip stop loss, maybe 30 pips up there. So I'm already calculating these things in my head to understand what lot size I should be using if I even take this trade. I don't want to guess while I take the trade. I want everything calculated before I even enter. And we have about 90 seconds to go into the close. So we're at, both for Nasdaq and gold, we're at these daily points of interest right near these yellow lines. Okay, so that's where naturally the buyers are. They're hanging around at these points of interest. So far, it is showing me that the buyers are there. We've got a bullish engulfing candle printing with 1:20 left. We've got a nice rejection on that, okay? So let's pay attention to that. The buyers were there. Okay, so we got 60 seconds to go into the close. Okay, so here's the close. Came down red, red, red down there. There's a big rejection. Rejection on Nasdaq. Now you got an ignited red bar. Okay, again, right at this area right here. And we're 5 minutes to go into 12:30. So if I take a look at the 30-minute candles, okay, this is what we got going on the 30 on gold. It was an ignited open, if you remember. 30 minutes, came all the way down just now and coming right back up. Where will this 30-minute candle close? Nasdaq has tweezer top highs on the 30 minutes and coming down. Let's see in the next 4 minutes if the 30-minute candle can officially close below this point of interest. It came down here, right here at 8 a.m. and came back up. It came back down at 9 a.m. and back up. It came back down at 10 a.m. back up. It came back down at 11:30 and back up. Now we might actually get a physical 30-minute candle closing below that yellow line. So it's maybe it's best to wait it out and see how the 30-minute candle will close down there. We might get our first official 30-minute candle closing below this yellow line. Or buyers are stepping in and we'll reverse it back up. Okay, and look at gold. Okay, so it came down there. If you took that impulse, that's what I mean. Sometimes you're caught. And then you got to ask yourself, if you're waiting, you could have avoided that. If I ask you now, after the fact, was there any red volume that closed below there? The answer is no. If you went in prematurely. Sometimes it works out, sometimes it doesn't. But that's where you have to have a certain amount of risk. Don't risk too much if you're trading an impulse trade. Put more risk or reduce your risk if it's more of a confirmed setup with more confirmation. If you're kind of just guessing or speculating, don't use your full allowance for that trade or really respect your risk management. Otherwise, you could do something that you're going to regret. Okay, so you see how we're still hanging out and now it's coming up bullish right there. So again, if you prematurely sold right at this point of interest, now it's coming right back up. We've got a 30-minute candle that's going to close. Nasdaq maybe picked up another good wick here on the 30 minutes. I'm just going to watch now to see how this candle will close the next 2 minutes because it's also the 30-minute close. Then we're going to get a new 30-minute candle open in the market at 12:30. That might bring in new buyers, new sellers, new volatility. Maybe there's some news at 12:30. Could change everything. And you see how we're coming right back up to the red box. So let's see how it reacts here for a third time. Do you guys have any questions about this type of price action? Do you guys enjoy this price action? Is this difficult for you guys? Are you guys understanding what I'm saying here? Does it make sense? Maybe not. I don't know. I can't read your guys' minds. I have no idea what's going through your mind right now. But we got 60 seconds to go into the close. Okay, so maybe a second bottom. Let's put the pieces of the puzzle together. One bottom right here. There's our neckline at that yellow line. It came back down. We just watched it holding. That might be the second bottom that's developing, and we have a new 30-minute candle opening the market. So can they cut through this resistance? Maybe hold this as support. Then we're flying through here at 12:30 and beyond. Time will tell. Same with gold. Did it come down here at this daily point of interest? Coming right back up. Maybe close in here. Maybe gold will start to move its way up. Okay, so we got 19 seconds going to close. Good answer from the buyers here at this point of interest. They're there. This is making a big wick on the 30-minute candle. Maybe a second bottom here on these 5 minutes. But again, we're coming in through this resistance right here. Can they cut through it? Okay, there's the close. Open ignited red. Is it going to be a quick wick? Remember, where's 50% of that big green body candle? Half of it is like right there. Okay, half of it is right there. If I want, I can grab my Fibonacci tool, go from the open, close, figure out where the zone is on this green body candle. Gold is building. Okay, nice hammer candle. You can kind of, if you want, you can kind of look to entertain to buy a hammer. I'm going to go in on Nasdaq. I'm going to buy this quick 5-minute candle because I know that this is representing the 30-minute candle. So I'm going to buy on Nasdaq. I'm going to place, I can go with a very, very tight stop loss, like just below 50%. But I know that the way how it's trading, it could potentially come down there. So I'm placing my stop loss, look, right below the daily point of interest line. Okay, and then I want to see if it will hold. If I grab my Fibonacci tool, I'm in a buy on Nasdaq. If it can hold right here, again, let me figure out where that zone is. There it is. Okay, so if it needs to come back in here, will it find some pending orders in the next 30 minutes in this green box right here? Okay, it's coming in. So we just got a nice bid where it went back up, but we got to cut through this upper supply area. So let's see if we can gain some 30-minute buyers and build off of this block right here. I am in a Nasdaq buy right now, and I'm building off of this 5-minute candle that just opened up our new 12:30 candle. And gold is still getting rejected right there. Okay, so now we're actually coming in. Remember that red line? That's 50% in there. I don't know if you can see it, but there's 50%. Did we come and touch 50%? It is a slight higher low pushing up. But remember, this candle opened ignited. So the buyers have a lot of pressure to push this thing up. But if they can, and if they can flip it, then we could potentially move through, cut through this resistance. So let's see. How many times? That was the second time it came down there and went back up. Is it going to come back down again for the third time? Okay, again, and then we can stretch this a little further. My stop loss, guys, it's right below the yellow point of interest. I see it tested there, and it tested there. I'm just placing mine. You could go a little bit further if you want below that wick, but that's good enough for me. Right below there. I'm going to place it below the higher time frame. That's a good answer we got from the buyers in our zone. Now, can we build a bullish pin bar hammer candle to potentially start to break through here? It would be perfect if we can close green above this red box, and then we can maybe build off of this box. We can flip this one green, and then we can use this one as a base of support below us. So let's watch how this candle will close. We still have 1 minute and 45 seconds to go. That's a lot of time. Sellers could push it down. Buyers could bring it up. It could consolidate right in this red box. And gold is just still inside here. It's testing up here. Okay, and oh, that was just the original profit target. I'm looking to take out this daily resistance and maybe fill those wicks and trade maybe into here. Okay. Good answer by the buyers. See how we held 50% right there? I could have held and maybe bought the pullback, but sometimes there's no pullback. Sometimes it opens ignited, there was no wick, and then it just takes off. So those are those woulda, shoulda, couldas. Gold is still, guys, consolidating. You can see it in here. Okay, so the trade is in a little bit of profit, but again, that's about 9-10 pips. We're looking, yellow line would be about close to 20 pips up there. If it can break through, or sorry, 12 pips. If it can break through, we're looking about 17. Take out those wicks, we're looking about 20 pips up there. It's just, the range is very tight. The range is very tight. Okay, 10 seconds to go. Where are we closing? Are we going to close above that point of interest, right at the point of interest? Figure out where's 50% of this candle. Flip this red box to green now. Lots going on here. Flip red to green. If you want to grab your Fibonacci tool real quickly, if you can't figure out where's half of that candle, go open, close. Got to be fast. Okay, there's the halfway point. Again, I can do my little red horizontal ray. That's half. Okay, if I need to figure out a zone in there, I can of that candle as well. But I got a lot of green boxes. I don't want to confuse you guys with all these green boxes. But that's 50%. So right now you see how it touched the yellow line and couldn't break. So you see how that point of interest is holding. See how it's kind of in this tough range. And it's coming back down red. Let's see if it will hold at 50%, more importantly, at our bigger green zone. I would love if it can hold above 50% and not even touch our green zone. Because if it doesn't touch our green zone, then it allows it more time to develop. It allows more pending orders to enter. It allows the depth of market to continue to build for us. So I would love if it didn't hit this green box. I would love if it just came down there and the depth of market is building to potentially break this yellow line. Sometimes if this was trending volume, we would already be up here right now. We would be up 20, 30, 40 pips. It's just the way how the volume is currently trading. It's very, very difficult. It's contained in a very tight space. Okay, and you see we're trying to break this point of interest. We held down here. Okay, that's a good answer by the buyers, but we still have this big red head. It's a hanging man candle. We have to keep bidding it up and flip this candle green, and we could potentially break through there. But you can see how we're struggling with this. We struggled right there. We struggled right there. But now we're building a little bit of volume. Can we get out of here? Okay, so now it's actually physically coming down and maybe going to hit 50%. Will it hold? Will it come down to the top of our green box? Are we still going to hold in here? Half the candle is gone, so we got 2.5 more minutes to go. So that's why these points of interest, these yellow lines, they're not easy to break. Okay, so the sellers are in full control of this candle. They came down to that 50%, brought it down a little lower. Are we going to get an answer from the buyers now stepping in? Are we going to get a nice bid, or is it going to continue to come down red? Okay, that was a good bid. You see how it kind of pushed up that red volume, created that lower wick? Okay, that's a good answer momentarily of the buyers. Now it's not just what's going on right now, it's how they close the candle. So they're pushing up, but you remember this candle opened with a lot of supply. And it opened up right below that point of interest. So it tells me that there's a lot of daily sellers right here. But we got to continue to rely on our depth of market to continue to build. That's why our stop loss is strategically placed below here, giving it room to breathe if it has to come down here. And you shouldn't be over leveraged. If it comes down here in the stop loss, you shouldn't be panicking. Okay, this is the entire range of the entire volume. And this looks like a double bottom breakout, like a W. It looks like this. I know it's really ugly looking, but there was one bottom. There's our neckline, like right here at this yellow line. It came back down. We got the double bottom. We got a new 30-minute candle. That's what we bought. So you see right there, if we can get above there and close, maybe we retest this, then we have clearance. If we can take out those wicks, we could drive all the way up to that hourly resistance. And we can turn this into a pretty good trade. But you see, good answer still from the buyers. Here we go, 20 seconds into the close. Can they flip the candle? We haven't flipped this candle once in this 5 minutes. This candle has not flipped green yet. The sellers are still right there. They're in control. Can we flip it? Can it flash green? Can it turn into a bullish pin bar? Can we turn it into a hammer? There was the first time it flashed green. Right there, right at the close. Okay? Flash green. Now we get an ignited bar again. Look at the manipulation. It opened right below that yellow line. If it's going to come down, can we pick up a higher low wick quickly? Quickly. We want a higher low wick quick because it closed strong. So can the buyers be? Yes, there they are with the answer. So it flashed green right at that yellow line. They didn't have enough volume to break it. Comes back down. They picked up more buyers. Now can we physically break this yellow line and drive up to these highs? Holy, I'm sweating here for 15, 20 pips. Come on, Nasdaq. It's like a snail. We're struggling. We're struggling with this yellow line. It peeked its head up there. Okay, we did create a new higher high. And as it's coming down, it's still this small doji candle. So it's still accumulating on low volume. The struggles of this resistance. But they're still there. The buyers are still building. Here we go. So it came down. Did it break any of our structure? No. Picked up a higher low. They pushed it back up there. Now, this will be a good candle to see how it closes, because what are we walking into? We're walking into a 1245 candle. So that's a new 15-minute candle. Can we get a good answer and close above? Make a statement. Close strong above this yellow line, and then maybe we can build off of it going into 1245. Okay. It will be demoralizing if they bring it back down red. Okay. So this is a big battle between the buyers and sellers right here. Guys, hit the likes on YouTube if you're understanding what's going on here and you appreciate this type of analysis in a live market, live trading. Okay, so what's the main objective we want? We need to close with green volume above this yellow line. Okay, otherwise, if it doesn't, then we could be going one leg down on the next 15-minute candle. Gold on the left, it's still, guys, consolidating right below supply. Right now, I'm focused on Nasdaq. I'm not looking at gold right now. Guys, this is real critical for me. Okay, my eyes are focused on Nasdaq right now. Where this will close, I'm looking for clues. I'm not taking my eyes off of this volume. I don't want to miss something. Okay, there we go. We got a nice push. Okay, this is where, if you want, you can start to reduce your risk. You can bring your stop loss now, take it from below that daily point of interest and bring it below that green block. You've just reduced your risk by a little bit. You've protected your capital while you're in profit. That's one thing you can do. Okay, now, can we take out these highs? What are the 5-minute highs we're struggling with? These two wicks right here, 20,916. Can we take those out? Can we come near this, close above those bodies? We got 90 seconds to go. If this body closes, we got to figure out again, where's 50%? Guys, that is approximately 20 pips, okay, right there. You can go to a break even if you like now, up 20 pips. Entirely up to you. I'm going to do that, okay? I'm going to show you guys risk management. I'm going to a break even right now, up 20 pips, okay? So I have no risk, no capital at risk on this trade. I'm in profit. Worst case scenario, it comes down red and it's a scratch, okay? I'm okay with that. But I don't want to lose any of my money on this trade, okay? Now, we're continuing to build. Where could we go to? Let's figure out the close. We might get a good runner here. Who knows? We're going into 1245. If you look at your 30-minute candle, you see look at what we're a part of. We're part of this wick, nice big body. Is this 30-minute candle in 15 minutes going to close engulfed? And we got, look at all the wicks above us that we got to fill. Can we get a little afternoon squeeze up here? Okay, so here's the close. I'm already looking for 50% of the volume right there. Already, I cut it in half. Okay, we got a nice green candle open. It's relatively higher wick. It needs to fill that wick and take that out. There's a lot of resistance above us, so it's probably going to make a lower high and come back down red to retest. Number one area is 50% of this candle. Okay, will it hold, or is it going to come and retest our yellow point of interest? This is now momentarily a point of interest of daily support now. Okay, again, I don't want it to retest this yellow line yet. I want it to maybe just come to 50% of this pure volume or higher and pick up new buyers and drive through here. Okay, so I'm at a break even up in profit right now. You manage your own account. You can scale out a little bit up there if you like. You can do whatever you want, okay? I'm not here to manage your account or trade manager. I'm here to show you how it just tapped into 50% of that candle and the buyers were there pushing it up, but we still have supply coming down. How many times will it come down here? How many times will it hold? If it can't hold here, see, it's coming down now. If it cannot hold there, it's going to target our yellow point of interest down here. Yes, it sucks. I'm pissing away some pips. But if you want to hold a trade, you're going to have to stomach this stuff. You're going to have to. If you want to turn a trade from 10 to 20 to 30 to 50 pips, you're going to have to stomach this pullbacks. You're going to have to. It's natural. That's the welcome to trading. Otherwise, make a decision. Okay, and gold, it came how many times into the red box? 1, 2, 3, 4, 5, 6 times. Rejected all 6 times. Pushing down. Again, it's pushing down here. It's trying to break, but every time it comes down there, it's going back up. So look for gold. If you get a red bar that will physically close below this area, that might start maybe some selling pressure coming down. Okay, unless the buyers keep building this. Okay, so half of our candle on Nasdaq is exhausted. We got 2.5 more minutes to go. So it initially held 50%, but came down like one notch below and coming right back up. We still got this red body candle. Again, buyers gotta hustle here. They gotta work hard. They gotta flip these sellers and maybe squeeze a little higher up here. But the sellers are still there. They were there. That's where those tweezer top highs were formed. Yes, we did break for a new higher high. That's good. We need to make higher highs in order to continue to building and going higher. So it's coming back up again. But let's see. Can we flip? Have we flipped this candle green yet? Initially at open it was green, but since then we haven't. Okay, now we flipped green again. So it's turning into a bullish pin bar. Can a bullish pin bar continue to accumulate volume and turn into a hammer? Maybe we continue to drive in the last 90 seconds. So we got a good retest. It wasn't exactly 50%. It was one notch below, like the 382, the 618, those notches below, one above, one below. Okay, now we got a nice hammer candle. Can we fill, take out that wick and drive? And then maybe then we can maybe start to secure a little bit of profit up there. Can we get a close above here? Can we get green volume closing above these 2 wicks? That would be good too if we can close above there. Again, we peaked our head up there. We couldn't create a new high, and then the sellers are there, pushing it right back down. So is it going to finish as a spin top candle? Is it going to close as a bullish pin bar? Is it going to close as a hammer? Is it going to close back down red down here? Time will tell. 45 seconds. Hang in there. Let's see. Last 30 seconds, I always tell you, who has momentum going into the close? It's like a basketball game. You got 24 seconds on that shot clock. You got to make a move in the last 24 seconds. Who's going to make it here? 24 seconds. It's like an NBA shot clock. Now you got 24 seconds in NBA to make a move. If you don't, the other team will get the ball. So right now, who's going to make a move? The sellers or the buyers? Last 24 seconds. Who's going to make a statement going into the close? It's a thin volume candle. Not a big body candle. It's a thin volume. Okay. Closed. Bullish pin bar. Thin volume. We retested the red line. Initially, we get that drive of buyers. Can we take out the high now? There's the high takeout. How high can it drive? Can we drive with this? Can we target these upper wicks up here at the top of the blue box? If we can drive up there, guys, this is 25 pips right now. If it gets up there, we're looking at 30, 33 pips. Oh, hell yeah. Let's go. Let's move with this. Guys, do your thing. If you want to secure 50%, if you want to, we had a tough, difficult session, and we made treasure out of garbage, like someone said. We turned shit into money. Don't piss away 30 pips. At least secure half. Take a trailing stop loss if you like. Maybe bring your trailing stop loss below this red line. Secure all of this profit. Buy some pancakes. There we go. Buy some groceries today. Let's go. Okay, I'm going to secure 80% up here because I got to go change my dad's tires. So I'm securing 80% up here. Making it clear, verbal. I'm securing 80%. I got 20% running with a break even. If this thing continues to go, fantastic. I'll continue to bank on my runner. So my runner at 20% is at break even, and I secured 80% up there. I'm happy. Day's wage in this shitty price action. Gold, guys, is building. I know it looks like a shitty double bottom. Guys, you got to smoke weed. Maybe you guys will see this. Down here, one bottom, neckline. Back down, double bottom, all this garbage. Smoke some weed, guys. You will see this. Maybe if we can close above there, retest this, gold could be driving this afternoon. Smoke the good stuff. Stay away from indica, sativa. Indica, I'll be falling asleep on the call with you guys. Sativa gets your brainstorming, gets your brain working, focus, thinking. Guys, any questions on that? Guys, we bought, like, recap now. I always recap. Even if I take a loss, I recap it. If I take a win, I recap it. If it's a break even, I recap it. Think about it. It came down here, the second bottom. We were going into 1230. We waited patiently for 1230. One bottom, neckline. Double bottom. There it is, 1225. We waited patiently for that candle. It pushed up. Yes, I took a little bit of that impulse trade, but look at the pullback. I could have grabbed the pullback. Could have, would have, should have. I didn't. Placed my stop loss below there. Protected it. It came down. And then we got the 1230 volume. We got it. And it's good right now for 30 plus pips. Might be more. But we're fighting resistance. Look at the wicks. If it can get up to that white line, mark 20,945 on your charts, guys. That's that hourly resistance. If we can fill all the way up there, make sure you do something up there if it gets up there. But there's still this big push down, that big push down. That's where we're fighting. That's why I secured some money. I don't want to get greedy because I know that these things can come tumbling down. I want to make our 2-hour session worthwhile. So please secure something. Any questions on that? We could have entertained gold as well, but gold is still consolidating. It's still consolidating below the supply zone. If it comes back up, know that double bottom that I just showed you. It's a funky double bottom. But if you can get that volume close above here, it's good. Any questions, guys? I got about 10 more minutes. Any questions? Hit the likes on YouTube, guys. Subscribe to the channel if you guys enjoy this stuff. And then what I do is, if I'm no longer using these lines, I clean up my chart, tidy it up, continue to follow the volume. It's making higher highs, higher lows. If this volume closes near the high, figure out where 50% of this volume is. Is it closing above those bodies? Like I have a lot of lines on my chart, guys. I look at those bodies. Well, that volume, that's where we're getting rejected. Right there. You can see the body. Point of interest on the 5 minutes. Right there. That candle open there. Sorry, close there, open there. That's what we're struggling to break right now. Now we're right at it. 20,923 and 61 cents. Right there. Can we break it and maybe fill this wick and drive with this? Yeah, Efren, at least we're watching the two charts. I feel more comfortable, Efren, doing it like this as opposed to going to Nasdaq, flipping back to gold. Then we miss out on something. Then going back to, like here, I can talk about both charts. I feel comfortable doing this. Like this is my comfort zone, Efren. Yesterday's style, I'm not comfortable doing that type of trading. I'm more into following individual candles, staying with it, looking for clues. I can talk, answer questions. Flip-flopping, you miss out on shit, believe me. This is more, I'm in my comfort zone doing this. I could do even 3-4 charts if you guys want. No big deal. But this is the way how I like to do it. Guys, that's a nice big body candle. Did you mark up 50%? Did you look? You can cut it in half yourself. Very easy. Cut it in half. If you're not comfortable cutting it in half yet, grab your Fibonacci tool. Where did that volume open? Where did it close? Right there. Very simple. Guys, we can all do this. Where did it test to? Look at the 618. Did it come into our 50? No, higher low. Do we have a zone there? Yeah, 1 notch above 0.5, 1 notch below. There's your green box right there. You can stretch it into the future if you like. Will it hold? Will it continue to hold? Stretch it into the future, guys. This is the way how you can hold trades and really, really maximize your trades. Believe me. Okay, so if this continues to hold, again, you see, stretch it into the future. If this zone fails, then this red line that used to be resistance turned to support. Will this red line hold? Okay, if it can still build here, maybe we still have strong buyers pending in here and maybe drive this thing. But that's a total, guys, of 30 to 35 pips, maybe more. Should be securing a little bit on this. Finally, we got a runner on these calls. So Nasdaq turned out, I got to respect you guys. Good pick on Nasdaq, guys. We battled through. Like, review this session. Review this call, guys. It's pretty good. We went through all of this garbage. I told you, I need sunglasses when I'm looking at this. But we still figured out the second bottom. Where did it develop? It developed not just anywhere in the market. It developed at the daily point of interest. That's why we did a top-down analysis. This area told us a lot of information. Look how many times it got faked out below here. And then we had a beautiful second leg. That's what we bought, the second leg, the powerful leg, on a new 1230 setup. Guys, time, sales, patterns, patience, discipline, all in one. We managed our risk. We put our stop loss below this point of interest, and then as it was moving, we reduced our stop loss to this box. While it was up 20, 25 pips in profit, we went to break even. And while it was driving up here, I secured 80% myself because I got to take off. I got to go help my dad put the winter tires on. If you're still holding, look at what you got. You got a retest of the green box, and you got a hammer candle potentially going to drive out of here. Guys, we may have momentum to come up to that hourly resistance. And that could potentially turn into a 50 pip trade up there. Okay, if it goes. I got a runner still going. I hope it goes. I hope this thing goes 100, 200 pips. Runners still bank some money. The reason why I'm not using Bookmap right now is because it was confusing a lot of members, and then it was hard to explain that and price action. I can go back to depth of market, no problem, but I wanted to maybe just focus on candlesticks right now, price action, and it will introduce depth of market. It is a little bit more advanced for most beginners, so I want to just keep things simple. Once you guys learn and master price action and candlesticks, then we'll introduce depth of market and strengthen your analysis with a depth of market. But I'm telling you, you don't need a depth of market. Look at how we do it. We do it ghetto style. We do it with these green boxes. And you don't have to pay big money for a depth of market. This way, it's more than enough. We're building our own depth of market, an honest depth of market. Right there, guys. Okay, wow. So got a hammer candle breaking out of here. Now, just continue looking at structure to the left. What is it trying to do? It's trying to fill the previous high wick, this wick right here. That one. What time was it? 11 a.m., right when we started our call. This is exactly right when we started our call. And look at, we're retracing all the way back to where we started the call. There we go. Right there. If it breaks a little further, it's going to target those 5-minute point of interest, body to body. 36 pips. If it gets up there, you're looking at 40, 42. Runners are running. Guys, any questions? Any questions? I'm surprised that there's no questions. I know it's exciting. We're live trading and things like that, but do you guys have any questions about this? Look at gold, okay? Gold also, guys, after the call, watch it if it closes down below here. Gold could drip a little bit, could drop down in here, bleed out, okay? Mahmoud, why did you take the buy and not sell Nas? Because here, Mahmoud, this yellow line, daily point of interest, I saw that they faked out the market there. They faked out the market there. They faked out the sellers there. They faked out the sellers there. Then I just explained, Mahmoud, listen, double bottom on the 5 minutes. It came down. One bottom there. There's my neckline. It came down. Second bottom. Hell, look at all those tweezer bottom lows at the yellow line. That was a big clue for me. And then we waited for 12:30. We bought right there, the 12:30 candle, and that's why we were looking for buys as opposed to sell. I would, Mahmoud, let me just answer your question too. I would have been looking for sells if the sellers here pushed it down and closed it red below there, and then it retested this and got rejected. Yes, then I would have been looking for a sell to come down to this yellow line, to that zone. But everything lined up where it was showing me that the buyers were controlling this position. Okay, guys? Good question, Mahmoud. Captain Boom, no questions? Excellent, excellent. Keep learning, guys. Keep. If you need to watch this over and just understand what I did here, there's a lot to take in here. Number one, we started the call. It was a tough, I'm going to be honest now, okay? This is where I'm dead honest. I'm not doing this to sound cocky or arrogant or anything. This is my brutal honesty. It was a difficult session when we started. Both securities were trading very choppy. So number one, what did we learn here? Patience, discipline. Wait for a proper setup. Some more than times they work out and you have a high probability trading these. With proper risk management, you can make money. We followed our 50% rule. We waited, we did a thorough top-down analysis, and we used our higher time frames to show us what's going on the 5 minutes. We managed this trade by placing an appropriate stop loss, and then as it was moving, we reduced our stop loss. Ultimately, we got it to break even. And then we let this thing run a little bit. Some of us secured a little bit. Some of us have runners. Some of you guys are still holding. I hope for the best. But whatever it is, I hope you guys learned something from this call. It was a good one. I like these type of calls where they're tough, they're challenging, because trading, this is the real trading, guys. You're gonna have to battle these situations in your head all the time. It's not easy. Okay, guys. I gotta go put some snows on the cars, some snow tires. I will see you guys tomorrow. 11 a.m. or noon, we'll get started. I haven't decided what time yet. I got an appointment tomorrow morning. Hopefully I can be back by 11. We'll get started at 11. We can go till maybe a little longer tomorrow afternoon. But please like, subscribe. We'll see you guys tomorrow. And enjoy the rest of your day trading. Dell is reporting in the after hours. Okay, guys? Dennis, thank you, bro. I appreciate you. Have a good day, guys. Thanks. Please, guys, hit the likes, subscribe, and we'll see you guys tomorrow. Awesome, guys. Good session. Good session, guys. Have a great day today. Enjoy the rest of your afternoon.
Hey guys, good morning, welcome to the live session of Stocks That We're Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.